So the day opened up today with a gap. So there was a bit of a relief from the selling, and we've had a lot of good buying last few days. So that's good on the part of the bulls. On the open, the market's always trying to find its direction for the day. So you can see I have a couple buys marked here early. This first one, after our gap up, it's looking to see can it bottom at the moving average. So we have a low here, and then we have a bit of a higher low right here. So I'll mark that right here. So you have a low, and then a higher low, double bottom. So you're going to have some people buying above this for a swing buy. And they're going to be trying to get at least 2 times their risk. So they're trying to get back up to these highs, and that's a reasonable swing buy there. Another idea for a swing buy is buying above this bar. So buying here and trying to get 2 times your risk. So you're going to try to get out somewhere up here. And since there are so many reversals on the open, then you want to try to be looking to get some of these swing buys early. And you might be wrong a couple times. Then on the one you're right, you might end up catching the low or the high of the day, so you can make a lot more. When the market started to move down, so we had 4 bars here, probably going to get a little bit more, the pullback. And then this bear bar, I was concerned that this bear bar might just end up as a second leg trap. So 4 bear bars, pullback, and then at this point we had a range here so far. And yeah, some swing sellers might sell below here, try to get down here. That's not too bad as long as you have a wide profit target. But I was thinking more that this might just be a second leg trap and we would be able to break out below here. So I wasn't looking at getting short below that. Fairly tight channel down. So a lot of selling through here. And then you still have room to yesterday's close. So looking at this double top here. And I think that'd be a good spot to try to sell and try to get back down to at least the close of yesterday. But also, we had the range from the open. So the high to the low, then we broke out. So that if you double that range, it puts you down here. And that's exactly where the market came down to. Came down almost to the exact tick. So if you're selling here, you're looking to get to the close of yesterday and to this low of the measured move. Market pulls back to the moving average. Call it different things. There's a double top here or a wedge top. Either way, I think that's a good short there below the moving average. Now, that short would have, unless you scalped that short, you would not have been able to get a swing trade there. So in the bears that were selling here, they end up trapped. Now we have 5 bull bars above, 5 bull bars, and this one closing above the moving average. And the bears are trying to get back below the moving average. They can't. And then you get this bull bar. So the bulls are, the bulls are able to be stronger than the bears here. And second entry long, so reasonable to buy above that. And since we're low in what might be a larger range, then I think it's better to try to swing above that. Possibly the market might try to get back up to the open of the day, especially since it was tested once. And we still might have room in the last little bit here to get up to there. Then another buy. Now we're above the moving average. We got 5 bull bars in a row. Little pullback, high one buy. So probably going to be buyers above that. And you could also look at it as a breakout test of this level. So this was resistance here, resistance. Then it breaks out. And now that market comes back. And instead of this being resistance, it acts as support. So that's a reasonable buy above that high one buy right there. So fairly quick review of the trades. And looking at the daily chart, starting to form a bit of a trading range here. And that's reasonable to expect. We had a big down move, then a big up move. So we're in a bit of a trading range. Probably going to be sellers above this range and buyers below that the market got down here. So I would expect that we're not going to go too strongly in another direction for at least a couple weeks. So where would I draw the range? Probably something like this. So if we break out above, the measured move of this range would put us up to the all-time highs, and I would not expect us to get much beyond the all-time highs. I would think there'd be more sellers above the all-time highs right now than buyers. Same thing if we break below. This is how I would do the measured move like that. That put us around 4,000. So I would expect there to be buyers around 4,000. The market is still going to be completely dominated by tariff news. So, I mean, just be aware of that. I think the market's still going to remain volatile for a while, and this is not the last we've seen of these very large days. So I do think we're going to be in a trending range, but we can expect to, I don't know, for a month or a couple months or a few months, we're still going to see days that can just suddenly shoot up strongly or down strong based just on tariff news. So that's just going to be the environment that we're going to be in for, I'd say, probably at least a couple months. That's all I got. We got 4 more days to the week, and I'll see you guys tomorrow on the next video.